Welcome to the Safe Wheel live stream where I share my P&L on 3 accounts and teach my proprietary Safe Wheel trade system. Please type in the chat that you can hear me okay. I want to make sure my audio is working. And be sure to post any questions that you might have. Daniel, thank you. It's working. Thanks for your response there. All right. And also be sure to post any questions that you might have before the end of the broadcast. I want to make sure I get to all the questions so I can help everyone out on the Safe Wheel or anything else with options trading in general, or maybe even specific. All right, let's get to the show, the beginning, and which has to do with the earnings edge. What happened last week? I traded Home Depot. All right. And it was up for a while and then kind of came back down at the end there, and I made $60. Basically, I would call that a break-even trade. So let's look at the spreadsheet where I have everything tallied. You can see my P&L here, something you don't see in other channels, 9,256. So let me put that into the spreadsheet there. $9,256. And what is the S&P SPY trading for? 446. 446.00. Okay. So my record is 33.19 and 8. I did update this, and since the late 2022 update, my record's 13.12 and 5. My average win is $908. Average loss $443. And average break even looks like it's about $8.38. So basically 50-50 win rate, but you can see that I win a lot more than I lose with the earnings edge. My 2020 results, or 2022 results, you can see, because this is when I started trading this live. There's a lot of results out there, but really the only results that I care about are the ones that I've been sharing with you. I really is not going to harp on other results outside of the results that I share live. Even though I do have some good results outside of what I share you guys, I'm not going to harp on those or talk too much about those because, you know, a lot of people do that. They talk about their results, but not the ones that they've shared over time. Okay, so, you know, we did 63%. S&P did minus 19. And this year up 13.2. S&P's up 16.6. So outperforming the S&P by 85% versus minus 6% since January of 2022. Obviously, we've had a lot more volatility in this account. It probably has 4 times the amount of volatility, maybe more. It's got a lot of volatility. Okay, let's talk about the Premier Level 5 now. Premier Level 5 would be this account here. We trade options on the ES. We have very low drawdowns. And our balance is 35,656. 35,656. Had a decent week last week. And with the PL5, our record is 18 wins, 7 losses, 6 break-evens, and we have 4 open trades right now. And this is since April 8th of last year. You can see we outperformed last year, 12% versus minus 6. This year, underperforming 6% versus 16. But the drawdowns are probably about 1/4 the drawdowns of the S&P 500. And you can see that overall, since the inception, outperforming 18.8 minus 9. So outperforming by twice as good with about 1/4 the drawdown. So definitely outperforms everything that I've shown. My back test and my real money forward test here outperform the S&P 500. That's my goal. My goal is to outperform the S&P 500, especially with risk-adjusted returns. Risk-adjusted returns are the real returns. All right, so that's the Premier Level 5. That's doing pretty well. Let's get to the Safe Wheel account. That would be this account here. We're trading DKNG. Looks like I own 100 shares. I haven't looked at this since Friday. Friday I did come in and I did roll a call, right? So I took care of the long call on Friday, but I haven't really looked at, I didn't really know what I needed to do until just now. Looking at this account once a week. I do want to update the spreadsheet, kind of see where we are. Let's see, 63.59. 63.59. You can see here, 2022 vastly outperformed 21 versus minus 19. This year, 4.5% versus 16, so underperforming. But when you start from the inception of when I actually opened this account up and started trading it live in front of everyone, 27% versus minus 6%. And the drawdowns are about half. No, actually with backtest and everything, the drawdowns are about the same. Maybe a little bit better, but not too much better. But either way, still outperforming. Okay, so that is the SafeWheel account update. Now we're going to actually do some trading. The first thing I always like to do is look at the put hedge. And we'll talk about sizing real quick. Between $5,000 and $10,000 is how much I have. So I'm going to do 3 put hedges and 1 premium selling or long call, showing a ratio of 3 to 1. If I was doing $10,000 to $15,000, I'd do a ratio of 6 to 2, or it'd still be 3 to 1 ratio, but I'd do 6 and 2. So that would be the sizing. But let's look at the strike here is a $25 put. So the question is, number one, is this 100 days or less? And the answer is no. That's good. We're going to keep it from that standpoint. And then, is it within 70%? So is this $25 strike price within 70% of this $28 stock? So I take 28.83 times 70%, and that's $20. So it's well within the range. So the put hedge remains. It's doing fine. It falls within the parameters. Okay, so next we would talk about the, we talked about the long call. I deal with that on Friday, so I don't talk about that today. So now we're just going to run basically the traditional wheel at this point. I own 100 shares. I want to sell a call against that, and my trade price was $30.50. So I want to do it at least at the $30.50 range. That's my assigned price, or higher, because I don't want to get assigned and called away from the stock at any price lower than $30.50. Let's see if that strike price is available at a decent premium. And I always want to sell here what's coming in this week. So 30.50 can't quite get enough premium. So I want to get at least 30 cents, and I can't get it. I probably would do this $30 one. I'd probably take the 29 cents or 28 cents. But this one here is too far. So which means that I'm going to go into tier 2. I'm going to start a whole new tier. Now I only do this one time, so I can only have a maximum of 200 shares. I'm not going to go to 300 shares, right? So I'm going to max out my, I'm going to use up as much buying power as I have available. I'm not going to overuse my buying power, of course, but I'm going to go ahead and sell a put. And I want to get as far out of the money as I can and get at least 30 cents or 28 cents. You can see we're trading for $29. So, at least 29 cents. And it looks like I can go with either the 28 or the 28.50. I'm going to go with the 28. I'm going to sell the 28. I'm going to sell one put. So this is not a naked put. I mean, it's technically, it could be considered that, but it has the capital behind it, so it's cash secured. Okay, so I'm going to sell this for as much as I can and start at tier 2. I don't think I've been in tier 2 very often, maybe only about 10% of the time, so this is pretty rare. So let's see if I can open up this put. In my working orders, let's work this order. Probably won't get 37 for it. Maybe 36. Okay, so I got $36. I've got this kind of long 100 shares where I'm kind of stuck, right? With the traditional wheel, you'll get stuck here and you can be there for years. And you don't have any kind of hedge behind it. And you can just sit there and watch your money not do anything for you. Or you can have a plan like a safe wheel, and we can come in and collect more premium here and have our hedge work for us. Okay, so that is, let me check my notes. Oh, be sure to, if you want to help other people learn how to trade more efficiently, I highly recommend the safe wheel. So please hit that like button. Just reach over with your mouse right now and just hit that like button. I'd appreciate that. Okay, so let's get into, see if there's any questions. I've got a, Daniel says good morning and that he can hear me okay. Audio good by Anthony. Steve-O says they're good. Audio good. Kevin says good morning from Lakeland, Florida. Will, when we backtest a strategy, do you recommend we test it in the 4 market type specific dates you talk about and a few of the recent years? Yes, typically the way I'll backtest is I'll have an idea that I like. I'll kind of have the intuition that it's a good trade. And then the first thing I'll do is I'll take it through maybe a crash, because that tends to be the market that kind of tears up trades the worst. So I'll take it through a crash, maybe 2020. Then if it works through there, then I'll take it through a grind down. 2022 would be good. Then I'll take it through a sideways market. Typically 2015, the first 6 months of 2015, that's a good sideways market. And then through a bull. It's not that hard to find a bull market. 2017, 2019, March through July of 2023 bull market. And then when it fits through all 4 markets, then I will, start it from the beginning. I think 2015 is a good time to start. It's really good data in my software. I do typically go from 2008, but the problem is sometimes the data, there weren't a lot of strikes available for SPX. That's what I typically trade. And so 2015 to present, I think I would feel very comfortable with any kind of results I get there. So that's how I would go ahead and backtest that. Any ideas that I had? Daniel, would you consider doing a midweek or even better, or Friday recap? I mean, I'd consider it. One of the things I like about the safe wheel is that it is designed to only be looked at once a week. Well, you look at it on Friday, the last 20 minutes of the market, and roll calls. So it's really twice a week, but really it's just designed to be looked at once a week. So I want to kind of stick to that. And a Friday recap, I mean, I don't know. I think once a week recap is pretty good. But I mean, if there was a super high demand for that, I would consider it. Can you share the backtest results you ran for the safe wheel? Yes. I don't have those pulled up right now. They take me a minute to kind of figure out how to pull those up, so I wouldn't want to do it live. I'm not sure how I can do that. Maybe next week. Let me write that down. And but I did go over that in a video. So it's possible, I might just load up a video just because I did a video on not just that, but a few other things. But what I can do is possibly just carve that part out and create a video just for that. Let me write this down. Safe wheel results video, because I did have a safe wheel results video done already, but I kind of redid a couple of years, so I wanted to kind of update that. So I might just release a video on that. That wouldn't be too difficult. Some guy, show me the money. Hi. How's it going? Edwin, would you consider selling a covered strangle if you were able to get 1% on that covered call at some point today? No, I don't want to add to my position. Let's say that I did a covered strangle, right? What that would mean is that the price of the underlying would be close enough to my 100 shares at $30.50 to sell a covered call, and therefore it's a little further away from my hedge. And therefore, if I were to open up a new put, it would be also further away from my hedge. So I'm getting two positions further away from my hedge. So that's the reason why I would not do a covered strangle, because that second 100 shares would be far enough or too far away. And I like to get as close to that hedge as possible. And that's the reason for the second tier. And the second tier is always closer to the hedge. So it's always much more protected. So I wouldn't consider that covered strangle. What's the small yellow circle on the DKNG circle thing? I don't know. I'd probably have to look that up on the charts. I mean, typically the circles kind of talk about, earnings and earnings conference calls. It's a little circle. I am not sure. I don't recall seeing that. It's a good question. I'm sure somebody here knows. And not anything that I pay attention to, I can tell you that. Daniel says, regarding the midweek cap, just a thought, because I'm still puzzled on what we are doing. I mean, is there a profit target we're looking for? Okay, so I'm assuming you're talking about the safe wheel. No, it's not really a profit target. It's just a system that happens and you just follow the rules. And most of the time when you get assigned is when you, like right now I'm assigned, right? That's where you most of the time make the most of the money. When you sell a covered call and then you get called away, which happens, that's typically when most of the money is made. But you just follow the system until that happens. You should be collecting premium at all times. If you get to a point where you're not collecting premium, that's when you just get out. I know that that particular rule I've kind of tweaked a little bit, but I'm going to stay with the rule of, if I cannot collect premium, I'm getting out of the position and starting over. I'm not going to be stuck in a position. But I hope that answered your question, Daniel. Will, the first video on your Safe Wheel playlist, I believe, has it. Yes. Yes, that has it. And that's an older version of the results. But yes, you can see that on there. Steve-O, what is the group's opinion on the music in the background? Personally, I prefer no music. Just my opinion. Yeah, I'd be interested to hear what you guys have to say. Ben, thanks for answering. With regards, sharing the backtest results, would it be possible to share Excel, maybe, so we can dive into them? Well, I have them in Option Explorer, so you would probably need to have Option Explorer unless I can create some type of file. I might be able to create some type of file for that. Email me directly. You can grab my email by going to my YouTube channel, and I might be able to pull that up. Okay. Tyler, when DKNG was down on Thursday, was it? Could you consider rolling the call so you can get a better price on the call? I could have. DKNG was down on Thursday. Yeah, I don't pay too much attention. So I only come in and really look at the price on, well, I only pay attention to the price on Mondays. I mean, I come in and roll that call on Fridays, but I'm just looking at the calls. I don't really even look at the price. I don't really pay too much attention to the price of the underlying to me, because that is not anything that I make a decision kind of based off of. I mean, unless it's part of the rules of the safe wheel, of course. Mark, it'd be helpful if there was some kind of ongoing tracking of all the safe wheel trades that we could refer to so we could see how the trades became profitable over time. Yeah, maybe that's going back to that spreadsheet, because then you can kind of pick out the trades, I guess, that really made the money. But from memory and intuition and everything that when I think about it, it's really when I get assigned and then called away. That's when I typically make the most money. That's when this thing kind of hits, collects, right? We're just kind of in limbo here, trying to collect a little bit more than what our hedge costs, and until we can get assigned and then called away, and then we make some money. Ben, in comparison to the max drawdown of the S&P, what is the max drawdown of the safe wheel? What is the max drawdown of the safe wheel? I might have it here. Let me take a look. Looks like peak to trough. This is only live. About 8% in 2022 and about 6% this year has been the max drawdown. I'm trying to remember. I just went over those numbers too. They're higher than this, but those are the actual real numbers from 2022 and 2023 as far as max drawdowns, peak to trough. But I don't have that number memorized. So maybe if you put it in the, if you go ahead and come into this, make a comment on this video, then I can go and dig in there and take a look and respond to you. Tron says it's an indication of a news feed. I'm not sure who you're referring to. Oswald, why you roll a cheap call on Friday, but you sell a put on Monday if you don't get it signed? Yeah, so I want to give my positions the leeway to get assigned, right? So I can't, I have to wait till Friday's over before I get assigned. And then I roll the call on Friday because it gives me protection over the weekend, because I could be, I have a put hedge on over the weekend. And if DKNG gets a takeover bid or something and it goes from $28 to $50, that put hedge is going to go to almost zero. It wouldn't be the end of the world, but I'd like to be protected. Man, comparing the safe wheel with the 2060 Fly, which do you consider is best to trade, or should we trade both? I consider the safe wheel a better learning tool in terms of if you don't know anything about options. If you have some experience with options, then the 2060 Fly is pretty good, because the 2060 Fly gets you learn things that are similar to the Premier Level 5. And I believe if I were you, my goal would be to get to the Premier Level 5, because that's when you have a little bit of money, you can take a lot of risk. But when you have more money, I wouldn't say a lot, but when you have a lot of money, I guess 30,000 or more, you want to take a little bit of risk. And so the 2060 Fly will help you kind of prepare yourself a little bit for the Premier Level 5. So I would trade both. But when the 2060 Fly, you aren't necessarily going to be profitable. You're not really going to lose. And so that one, I would only trade one tranche. I would not size up with that for sure. Martin says, thanks for your response to the yellow circle indicator. Yeah, anybody know what that is? I am not sure. Okay. Oh, here it is with Tron. The yellow circle indicates that a recent article for the stock is available. Okay. Interesting. I think that's new. I appreciate that, Tron. Oh, that's what you were referring to when you said it's an indication of a news feed. All right. Ben, I'll make a comment. Thanks for the answering my questions. I like your channel and what you're doing with regards to transparency. It's very refreshing. Thank you. I appreciate that, Ben. And I would hope that other instructors would share their P&L. And I think it's pretty easy to tell the ones that are real about what they're doing and compared to the ones that are not real at all about what they're doing and having just crazy, outlandish claims as what they can do, but then they don't show their P&L. So that's kind of a red flag. All right, but there's a few of us now that are sharing our P&L. There's even some guys are using spreadsheets, but you can kind of tell that their P&L is real because they'll show you, their P&L is moving like 1% here down, 1% up. You can kind of tell it's real. But then there's other guys who don't share their P&L and they talk about how they doubled their money in 3 months and stuff like that. So stay away from those guys. I would anyways. Okay, I don't see any more questions here. I'm going to go ahead and start winding down. And one thing I always like to say, if the P&L is not real, what else are they trying to conceal? All right, I'll be back next week. Thanks, guys.